Palantir beating expectations, surpassing $1 billion in quarterly revenue for the first time and raising its full-year outlook not only above what it had previously said, but even a bit above what Wall Street had been expecting, higher numbers than that. It says that's happening among demand for its AI software continues to accelerate. Joining us right now is Gregg Moskowitz. He is Mizuho's senior enterprise software analyst. And Greg, thanks for being here this morning. I know you were thinking that this could be a pretty good quarter. You raised your price target even before we came out with the numbers and said that they had a chance to accelerate their total revenue growth for a fifth quarter in a row. But your price target went from $116 to $135, and that stock is now at close to $170. I guess it's hard to keep up with how quickly this company's moving.
It is, Becky, and in fact, our price target now stands at 165. Thanks for having me, by the way. As you mentioned a moment ago, Palantir grew revenue 48% year over year this quarter. That beat the guidance by 7 points. And in fact, on a percentage basis, this equals the most that they've ever beat a quarter by. And that's a pretty remarkable feat when you're talking about a company that is now at $4 billion of annualized revenue.
Not to mention that it has grown so rapidly over the last year. That stock is up 600%. There are some out there who say, wait a second, can it really keep up with the accelerating stock price? What's your answer to that?
So I would say it's a tale of two cities. On one hand, you've got a company that is truly hitting on all cylinders. As I said, 48% revenue growth. Their top 20 customers on average are spending now $75 million per annum. They have revised guidance in a way that we haven't seen any other software company do so far this year. For example, their U.S. commercial business, which is a little bit over 30% of revenue, they started the year, Becky, at guiding to at least 54% revenue growth. They just revised that to at least 85% revenue growth. And so, again, it is pretty stunning what they're doing. However, it is also stunning in terms of the valuation multiple that they have attained. And so based on our revenue numbers for next year, they're now currently getting about 80 times next year's revenue. Now, if I compare that to our basket of high growth software companies, in our universe, they are trading at 6x that basket, which is at 12 to 13 times. In fact, Palantir, if I were to compare them to the next highest multiple stock, which is Cloudflare, Palantir is trading at a 3x premium to that company. So we love what Palantir is doing. Again, they're executing better than anyone, in my view, right now within software. But obviously, there's a price. And what is the company worth? And so that is the the challenge from here as well.
But your price target is roughly in line with where the stock is right now. So you must think it's worth what people are willing to pay.
It is. We think so. And the reason why is if you look at the rule of 40, which many software companies and some other tech companies look at very closely, where you're combining revenue growth with operating margins, 40 is considered a standout result based on these two metrics in combination. What Palantir just did this past quarter is over 90. Now, if I were to compare that to the rest of the software space, and this is specifically the best-in-class software companies, Palantir's rule of 90 plus is roughly 2x anybody else in software. So because of that, at least significantly because of that, there is no question that they deserve a very substantial premium in our view to the rest of the universe. Now it just comes down to what's the risk reward and how much more multiple could they really get. And so that ultimately is the challenge.
Just last week, the U.S. Army said that it might purchase services of up to $10 billion from Palantir over a decade. How much of this is driven by what the United States military is saying and then by other countries as well?
So this really is, I think, heavily driven by the U.S. Naturally, we are in an escalating geopolitical environment. The U.S. Army has made already some very substantial commits to Palantir, and this, we believe, is going to be an extension of that. The only comment that I would make here is the $10 billion is not a promise. It's not a guarantee. That effectively is the cap in terms of how much the Army can spend with Palantir over that 10-year period, but certainly it's going to make it more frictionless where they can add projects and spend more with Palantir without going through as much effort as it relates to procurement, et cetera.
It's so interesting listening to Alex Karp. He can tell you little bits of things. He can't tell you everything because obviously a lot of what they do is classified. As an analyst, how do you try and sort through all that and figure out how to value the company?
It's a terrific question. This is a company where it is just harder, for instance, to do channel checks. As you mentioned, the government contracts are shrouded in secrecy, as they need to be. The commercial business, I will say Palantir is doing some more work with partners, but a lot of those deals are signed directly. So there's only so much, corroboration that you can sort of get in the field, so to speak. That being said, what we have heard and what we wrote about in mid-July when we did upgrade the stock is that there has been a very significant uptick in inbound inquiries from companies, specifically enterprises, inquiring about Palantir and trying to get closer to understanding what this company can do for them, what use cases they can deploy, and how they could add value. And so that we found very interesting.